Okay, welcome back everyone. Just a quick sound check and then we can get started. Hope everyone is having a great day today. It's probably the first day where I think the whole market's in a panic right now. Okay. All right, just a quick sound check and then we can get started. Our audio seems to be good on my side. Just a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products that carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. All right. So, everyone ready for what's going to be on for tonight? Okay, a couple of things. If you guys want to take a look at the equities market, just ask for it, and we'll take a look at the equities markets. I'll give you the groundwork for what's likely going to happen tonight. All right, let's bring it back to the Euro USD first, and I'll explain a little bit about the possible outcomes of the CPI numbers, not CPI, the FOMC decisions. We'll talk a little bit more about the flash CPI that was just released from the Eurozone. Okay, FOMC, what's likely going to be the consensus right now? The majority of the market, it's expecting a 25 basis points hike. In terms of the probabilities, whether or not there's going to be a lower rate hikes or a higher rate hike, there's actually two. So one is actually at 12.5 basis points. So about 20% of the survey, it's on the preparation or the assumption that the Fed is going to hike by 12.5 basis points. If they do that, that's going to be below what the market is expecting. That's going to be really bad for the US dollars. It'll be good for the Euro USD, it'll be good for the pound. The gold, it's probably going to skyrocket past 1950, right? The stock market, the equities, the US 30s, S&P 500, the NASDAQ, that's all going to rally if they come up with 12.5 basis points. Now, I don't think that's a likely scenario, right? So the majority of the consensus is going to be on the 25 basis points. Now, that's basically what's being priced into the market. I think we could actually put in a third scenario where the Fed would actually hike by 50 basis points and surprises the market. Out of all that, I much prefer if there's going to be a surprise from the FOMC, because if the FOMC hikes by 50 basis points, then we are likely going to be seeing a little bit of a recovery on the US dollar, right? The dollar index is likely going to shoot past 102.50. The Euro USD, the Pound USD is likely going to get slammed. The US 30 and the S&P 500, they are probably going to be looking at a drop in more than 500 points immediately, right? So I like that third scenario a lot more. In terms of the Fed coming up with 25 basis points, I think there's a lot of uncertainty on how the market is going to react. Is it going to be stable enough, or is people are going to be saying, hey, you know what, 25 basis points, it's still a interest rate hike, it's still higher, and it's probably not good for the economy. This is the problem with the 25 basis points hike. Because if they announce a 25 basis points hike, I think the market is likely going to whipsaw until the press conference, and then we'll get more details. We get a 50 basis points hike, then it's more like an immediate reaction to the market. We're likely going to be seeing more of a one-way movement in the market, and it's going to be a lot easier for everyone. There's going to be less whipsaw, and the initial market reaction would probably lean towards a stronger US dollar. So we do expect the Euro USD, the Pound USD, and gold to slump if that 50 basis points surprise happens. So either way, I don't like it if the FOMC comes up with 25 basis points. It's probably that's what a lot of people are expecting. But from an analytical perspective, being a currency strategist and whatnot, I look at that as more of a headache rather than anything else, and that's where it gets a lot riskier for any intraday traders trading the market today. All right, so let me answer a few questions here. I think there's a little bit of a confusion. Graph, the Telegram channel that I manage, it's in Indonesian. It's in Bahasa Indonesia. But you can ask me questions in English, and I'll be more than happy to answer. At this point in time, I don't actually manage an English Telegram channel. But yeah. Okay, hopefully that gets it out of the way. Right, so let's take a look at the dollar index first. The dollar index is kind of basing out a little bit, so this is why I'm leaning towards that probability of a potential surprise from the FOMC, because if that surprise happens, it's going to trigger that correction in the US dollar. So, the US dollar has been going downhill for a little bit. So we need that little bit of a correction to happen. So this is more of a technical correction. If it surpasses 102.50, and then that's where the correction is going to start. That's where the dollar index is likely going to come off the oversold market condition. Right, in regards to the Euro USD, if we take a look at the Euro USD here, it's been a choppy 2 weeks in the market, and right now, pre FOMC market, it's kind of just bouncing off between range between 1.0850 to 1.09. So if we take a closer look at the Euro USD on the hourly time frame, that's basically what's been going on. It did bounce back down a little bit towards 1.08, so the range has actually widened, and it makes things worse because once we see a range that opens up, it creates a little bit more of a prolonged sideways market condition in the market. So this is undesirable at this point in time. And if we take a look at the momentum on the hourly time frame, this is really pushing it. In terms of resistance, we do have that 1.09, 1.0925. I think the upper resistance still holds at this point in time. That's going to be around 1.09. So if you're trading intraday on the Euro USD, you need to pay closer attention to 1.09, 1.0925. If there's a move that breaks above 1.09, and it could happen because it's still going to be about another 7 hours to go, right, for the FOMC. So we've still got a day worth of trading in the market. Can price actually break above 1.09? Yes, it could. It could actually break above 1.09 on the start of the US session. If it does break above 1.09, don't expect a rally to the upside that's really, really strong. You need to pay closer attention to 1.0925. So if you're thinking, right, if it does close above 1.09, can I trade it? Yeah, if you want to, but keep in mind, in terms of stop losses, you need to place it closer to 1.0850. It's not going to give you a great risk reward ratio. All right, and I don't think it's really worth it to risk the whole FOMC just to nab a 25 basis points. So my preferred scenario, again, at this point in time, is if there's a rejection at 1.09. Even with the FOMC and all the potential that the FOMC could be less hawkish, they could be dovish, still gives a little bit of a room to go in terms of trading the next 7 hours, right? I would prefer to look for a potential rejection at 1.09. I much prefer to risk 25 pips rather than 50 pips at this point in time. Do keep in mind, though, if you plan to go short on the Euro USD, it's going to be counter trend, one, and you will be trading based on an assumed resistance at 1.0925. So we actually don't have any strong confirmation either in terms of potential target. You might want to go for maybe a little bit 10 pips higher than the 1.0850 level. It's still going to give you a much better risk reward ratio than attempting to go long the Euro USD at this point in time. It is going to be risky, all right? So have a real good thought about what you want to do, especially awaiting such events like the FOMC, which is going to be the first interest rate hike for 2023, and it actually sets the tone for the year in terms of what the FOMC is likely going to be doing. There's not going to be any new economic projections on tonight's meeting. I think the next economic projections would be next month in March, I believe, if I'm not wrong. All right. So Euro USD, just keep an eye out on 1.09, 1.0925. If you do have a long positions intraday wise and you're still holding along on the Euro USD, do keep in mind though, in terms of how far it has gone up, the FIBS has actually surpassed 161.8%. The 200% is actually located at 1.09. This is based on the hourly FIBS for the Euro USD. I'll zoom in a little bit, right? So right now, I much prefer if you have something like a stochastics or the RSI or something that tells you a change in the momentum, because if we come back down below the 80 level at around 1.09, then I much prefer to go for a short position on the Euro USD closer to 1.09 if there's a confirmation on the stochastics. Okay, so let's just sink in a little bit. Now, in terms of pound USD, it's pretty much the same scenario. We still have that range between 1.23 and 1.2450. This has been the range that's been established since 18th of January. So it's been 2 weeks, more than 2 weeks, I believe. But anyway, 1.23, it's going to be your support. 1.2450, it's going to be your resistance, which is, I know it's huge. It's about 150 pips in terms of range, right? But if you take a look closely at the hourly time frame, I'm not sure what this 1.2325 is, but okay. So if we take a look at the hourly time frame in terms of the positioning on the pound USD, unlike the Euro USD where it's actually above the Ichimoku cloud, the pound USD is actually still below the Ichimoku cloud. So this one here is a little bit easy, all right? In terms of mid-range resistance, that would be at 1.2350. As long as price doesn't close above 1.2350 intraday-wise, there's no hourly close in the next 7 hours or so, then we do expect this one here to be capped a little bit at around 1.2350. If that's the case, then I would actually be waiting for a short position around 1.2350. Now this is again going to be risky because of the potential whipsaw during the FOMC. Either it's going to be 12.5, 25 or 50 basis points. There will be whipsaws in the market, right? Maybe leading up to it, maybe 50 minutes before the FOMC announcement, maybe 30 minutes before it, we might actually see that whipsaw happen. I don't think the whipsaw is going to break through the range. I don't think it's going to be like 100 pips whipsaw in the market. But just do keep in mind, if you have any positions open leading up to the FOMC, you just need to know that there is a huge event coming out, which is the FOMC rate decision, and that's going to create extreme volatility in the market. And this is not going to end just tonight, all right? It will continue on tomorrow with the Bank of England expecting to hike by 50 basis points, as well as the ECB expecting to hike by 50 basis points. Now, which comes to attention on the flash CPI that we just had from the Eurozone. The flash CPI actually dropped down significantly. It's down from 9.2 to 8.5%. The core CPI, though, it's actually flat, and the unemployment rate nudges up 0.1%. So it's a little bit of a mixed data. I don't think it's actually of any significance today, but it will be of significance tomorrow because the the ECB is going to meet up tomorrow, and they'll look at the inflation data, the flash CPI that we just got. It's a huge drop, 9.2 to 8.5. The expected drop was just to 9%. So this is way below what the market was pricing in. And if you take a look at the Euro USD, there was a little bit of a rally there because the assumption is that the ECB might just relax a little bit. I don't think they'll change anything though. With ECBs, once they say that they want to hike high, and they always follow through. So I think we're still going to be looking at a 50 basis points hike tomorrow, but today's data is going to create a little bit of confusion amongst traders tomorrow. All right, so you got Euro USD and Pound USD pat down. It is range bound, so if we take a look at the daily time frame, you might not have a swing positions because swing traders or position traders are looking for a break above 1.2450 or a break below 1.23. If there's a break below 1.23, then I think a lot of swing traders are likely going to be trading this towards 1.2150. Right, it's not going to be a great risk reward ratio initially, but this can be adjusted later on. Right, you can have your stop loss at 1.2350 once it started moving below 1.23. So this could be a potential scenario, and this is the reason why I'm actually a little bit worried about what the market is expecting from the FOMC. By looking at the momentum and the drop in momentum in terms of price and whatnot, I think dip down inside. A lot of traders are anticipating a potential surprise from the FOMC. So if we take a look at the position adjustments here, it's kind of setting up for a little bit of a dollar gain. So whatever the fundamentals says, it might create an initial spikes here and there. But if the technical follow through and we actually do have a confirmation that the US dollar might correct itself, then we do expect a little bit of a pullback on the pound USD and the euro USD as well. So I'm a little bit concerned about the potential surprise because from a technical standpoint, we are actually coming off the overbought condition. We might actually confirm an overbought condition once the slow stochastics move below 80. And price moved below 1.23 on the pound USD. So just now, I think there was a question on pound USD. Any updates on the pound USD? When are they when could they possibly start a new downtrend? It's not going to create a new downtrend because technically, as long as it's trading above 1.18, we're still going to be in an uptrend for the pound USD, but it might initiate a little bit of a correction to the downside. So if we zoom out and in terms of target levels, in terms of support level at 1.2150, that correction, it's probably just going to be about 50% of what the market has gained in 2023. Right, so we might actually just be looking for a little bit of a 50% pullback, maybe 61.8%, but it's not going to change the trend. It will create a short-term trend to the downside. All right, this is, if we take a look at it on the daily time frame, we'll consider it as a technical correction, but the trend remains to the upside. But if we switch to the hourly time frame, we are already within a short-term trend to the downside at this point in time. Further confirmation on this downside movement is likely going to be confirmed if market moves below 1.23, and that's basically the key points, key levels to watch out for intraday wise. All right, so create a zone. At least you need to create this range. If you don't have that range in your chart, just label it. It's really simple. It's 1.2450 and 1.23, and that's basically going to be the main focus on what the market is going to be doing today. It's actually within this range at this point in time. So if we see a market continues to push above 1.2, closer towards 1.2350, but if it fails to close above 1.2350 on the hourly time frame, then be prepared for a potential rejection there. So market could move up closer to 1.2350, closer to the FOMC. It might actually turn around. So be very careful about the pound USD and the euro USD. If you're trading short term, it's okay. If you have any positions, then consider what you have. Are you close to your expected target? If you're maybe just 15 pips away from the target, 10 pips away from the target, I would say, you know what, it's safer to just close off and be on the sideline for a little bit until the FOMC happens. At least that we get a little bit of a guidance in terms of where the market sentiment is likely going to be. What does the interest rate hike mean for the sterling yen? Nothing much, in all honesty. It's not really directly related in that sense. But if we are looking at a weaker pound, then it might actually pressure the sterling yen as well. Which is the next thing that I want to talk about is actually the dollar yen. The dollar yen is actually in a very unique position at this point in time. It's not really moving lower, right? It's not really in a downtrend. It's not really in an uptrend or anything like that. It's actually really, really flat at around 130. Now, if the FOMC hikes, then we might actually see dollar yen gains. Now, depending on how strong the dollar yen gains, the sterling yen and the euro yen might be flat. But if the dollar strength is so strong that it actually drags the euro USD and the pound USD down significantly, then like suffer, not because of the yen strength, but more on the dollar strength, right? But in terms of impact on what the FOMC does in the sterling yen, the impact would be secondary. It won't be, primary. Now, let's take a look at the dollar yen a little bit. So if we see that surprise hike from the FOMC, then we could potentially see the dollar yen pushes up closer to 132. If the FOMC starts being dovish, then it might actually break below 129. And if that breaks below 129, it's actually going to initiate a strong sell-off in the dollar yen. Now, this is where the sterling yen and the euro yen comes into play, and this becomes unique as well. Because if the dollar yen slumps significantly, the euro yen and the sterling yen, even though the euro USD and the pound USD might rally up, they might get dragged down by this yen strength. So this is what I mean by secondary. The impact of the FOMC decision, it's not going to be immediate on the euro yen and the sterling yen. It will be immediate on the dollar yen. But the euro yen and the sterling yen, we need to consider what's likely going to happen on the dollar yen and what's likely going to happen on the euro USD and the pound USD. Remember that the yen crosses are crosses, right? They are not primary FX pairs or anything like that. They are yen crosses. So it will be dependent on how strong the yen is, it's going to be dependent on how strong the Japanese yen is, and how strong that Japanese yen is could be impacted by what's going to happen on the dollar Japanese yen. If the FOMC hikes by 50 basis points, it's going to drive the US dollar. It's going to push the Japanese yen lower. If they go by 25 basis points, this is where I don't know what's going to happen in the market. Market could react as, it's as per consensus. I think we might drag down the US dollar to the downside. It might push the dollar yen lower. It creates that strength on the Japanese yen. If they come out with a 12.5 basis points hike tonight, it will be very, very dovish from central bank perspective. That's going to drive the US dollar down. It's going to strengthen the Japanese yen. It's going to strengthen the euro. It's going to strengthen the pound and the Australian dollar as well. All right. So this is where it's unique. If you're trading the sterling yen and the euro yen, the damage from the FOMC is not going to be immediate. There's a lot more work to be done if you're looking at those yen crosses. Okay. Gold and euro flies, the pound USD hangs, right? It's not moving. It's pretty much flat, right? All right. So that's the dollar yen, the pound USD, the euro USD. Next, we'll take a look at the Aussie USD. The Aussie USD, in terms of where it stands, it is actually still flat between 70 cents and 71. It nudges up a little bit above 71, but if we take a closer look, it actually never closed above 71.25. So technically, it hasn't, surpassed that key 71 cents level. So if you are looking for your resistance on the Aussie USD today, it will be between 71 to 71.25, right? This is not a morning star by any chance. I know a lot of people are going to be looking at this and say, hey, it's a morning star. It's not a morning star. A morning star cannot happen at the end of a trend, an uptrend. So we need to disregard this as actually not a morning star at all. You might consider it as a hammer pattern more than anything else. But it might be a little bit deceiving as well, because back again, if we take a look at the change in the momentum, very similar to what the Euro USD and the Pound USD is going to be doing, there is that chance of a stronger US dollar, and that's my concern for tonight's FOMC. I don't know what's going to happen, but I think, don't ignore the possibility that the dollar might correct itself. Right. Now, with the hourly time frame, take a look at this one here. The Aussie USD has transitioned above the Ichimoku cloud, but right now it hasn't surpassed 78.6%. In terms of divergences or anything like that, I don't see any notable divergence. We might actually see price pull back towards 70.50. I don't know if this is going to happen now or is this going to happen later. If it's post FOMC, then anticipate a little bit of support building up at 70.50. But if you take a look at what's going to happen in the next 7 hours or so, all right, support is still going to be at 70.50. So intraday wise, if you have a long position on the Aussie USD, for example, maybe you went long there somehow and your stop loss is there. This is where we are right now. If you're targeting 71 cents, then you could move your stop closer to 70.50. I think that's going to be a stronger support at this point in time. If you want to give it a little bit more room, dropping it down to about 70.30, it's just 16 pips, so it's not a huge deal. No deal breaker or anything like that. Right, with the Aussie USD, this one here, it is transitory at this point in time. We do see that shift and change in the trend to the upside, but I want to be a little bit more cautious because if we take a look at this one here in the Euro USD, even though we have that transition above the Ichimoku cloud, some of you guys might signal that as a potential transition in the market. We are not quite done in terms of the retracements, and if we take a look at where the 71 level is, it's going to be just slightly above 78.6%. So intraday traders, the key resistance for the Aussie USD remains at 71 to about 71.25. Okay, so you still want to be cautious of that level, and this range here, that's basically what's capping the market from going higher. So I think we cannot ignore that as something that you can actually ignore in terms of resistance. I think that's still going to be a key level to watch out for, right? So just be mindful that we're actually still within a retracement level. We haven't broken through. Position traders that aims for a move towards 71.50, 72. I think it's still too early. With what's in store in the next 7 hours, I think it's easy for the market to just turn around. What's my view on the pound AUD? Let's take a look at the pound AUD, at least on the daily time frame first. I think it's in a downtrend. My view on that, in terms of fibs, I think we have reached targets. 127.2 might push towards 161.2, maybe closer towards 1.72 on the pound AUD. That's at least on the daily time frame. In terms of the hourly time frame, this one here is a little bit tough to look at, because again, if we go by the fibs, that's actually going to be this one, and very, very close to 161.8%. So if you are still short on the pound AUD, then you might want to go for that 161.8%. That's likely going to be about 1.7375. Can it go lower towards 1.73? Yeah, I'm sure it could. The overall stance on the pound AUD is that I don't really look for any potential long on the pound AUD. I think we're still in a downward trajectory on the pound AUD. So we take a look at the pound. That one there is a little bit flat. The AUD was gaining a little bit. So I think overall, we are looking at a little bit of a weaker pound AUD. So I'm really, really concerned with the pound generally, because it's actually closer to support than resistance. At this point in time, the stochastics is not really helping in terms of how it looks. All right, Aussie New Zealand. Aussie New Zealand. Aussie New Zealand, that's pretty easy on the Aussie New Zealand. I think the Aussie is gaining. I think overall, in terms of major currencies, I think the Aussie is actually pretty strong. It holds its ground really, really well at this point in time. With the New Zealand USD, right, we'll take a look at the Aussie New Zealand, but let's take a comparison on the New Zealand USD and the Aussie USD. The Aussie USD and the New Zealand USD, in terms of key resistance on the New Zealand USD, is actually going to be 65. So we actually need to break above 65 before any continuation to the upside. So it's a clear sign on the New Zealand USD. So the Aussie New Zealand itself, if we take a look at it on the daily time frame, the potential for this one is actually still to gain to the upside. Hourly time frame, this one here again has crossed above the Ichimoku cloud. In terms of support, there's a lot of support building up here. Maybe we actually could see a little of an intraday support at 1.0950. And below 1.0950, obviously we still have 1.09. 1.0925 actually, that's where the Ichimoku cloud is located. Right. In terms of, is this done at this point in time? I think we're closer to 127.2%. Closer to 100%. This would be the 4-hourly swing, right? I think the 4-hourly still has a little bit of room to go for the Aussie New Zealand. I think we could be eyeing for 127.2. In terms of what's going to be stronger, is it going to be the Aussie USD or is it going to be the New Zealand USD? The key trigger could likely be with gold. So if we have a huge sell-off in gold, we might see a little bit of a stronger sell-off in the Aussie USD. They're not really perfectly positively correlated or anything else or anything like that. But if there's actually a strong sell-off in gold, then we actually might see a little bit of a weaker Aussie compared to the New Zealand. So I think that's the only risk involved with the Aussie New Zealand. But other than that, if we take a look at the Aussie New Zealand on the 4-hourly time frame, this one here is still on track towards 127.2. Can I see the flag on the pound AUD on 4-hourly time frame? Are you thinking about this one as a flag? Right, because this one here, I think this one has exceeded 20 bars. Yeah, it's gone past 20 bars, so the limit for it to be a flag is actually at the 20th bar. So 8, 7, 6, 5, 4, 3, 2, 1, 0. Right. If the transition happened at around 30th of January, then yes, I would consider that as a bearish flag. But this is no longer a bearish flag. This is an ascending channel in a downtrend, and yeah, I think we are still looking at the potential movement towards the downside in terms of projections. I think this one here on the 4-hourly time frame, this still goes by this swing here, so we're actually very close to 161.8%. In terms of how far down it could go, maybe towards a little bit towards 1.73 for the pound AUD. But yeah, it's not a flag, but very close to a flag. It just has a lower probability in terms of confirming a continuation because that's an ascending channel rather than a flag. How about Euro Yen? So yeah, Euro Yen and the Sterling Yen, they're pretty much in a similar situation. It is actually a little bit confusing with the Yen crosses. So to navigate the FOMC and the Yen crosses, they're actually going to be a little bit tough, right? So if we take a look at the daily first on the Euro Yen, the range that's been established is basically between 138 and 143, and that's a huge range, and this is the range that's been established since late December. It is 500 pips. Yep, that's pretty much the range that's established for the Euro Japanese Yen. Now I can go here, but this one here is looking a little bit messy. I can clear it up a little bit, but I need a lot of the resistance lines that we have there. Now, I would actually stay clear from the Euro Yen just by looking at the momentum on the hourly time frame. It's very, very choppy, and it has been ever since the 23rd of January. So we are actually really in a really choppy market condition. The Tenkan-sen and the Kijun-sen just keeps coming in and out of each other. So I think there's a huge risk involved here. In terms of resistance, we got 142, 141.50. Those are likely going to be your two key levels to the upside if you have long positions. But the risk here is that this one here could slide down all the way down to maybe 140.50. We might see a little bit of a temporary support at around 141. but that's going to be adding more lines and creating a lot more confusion. So just to keep it clean, you know, the range here, if it fails to go above 140, 150, then if it fails to move towards 142, then it could actually get dragged down really quickly towards 140, 150. So the risk it's really wide, because right now I expect more of a choppy market until the FOMC, or maybe even until tomorrow on the ECB. But there's a huge risk involved here. If the market goes up, it might get capped at 142. If all of a sudden the euro loses a lot of strength, or the dollar loses a lot of strength, even though the euro USD gains, there's still that risk with the euro yen getting pushed down towards 140, 150. So I would actually stay clear of the euro yen. I don't think there's any need to rush into euro yen. And to be more specific, if you guys are looking at the euro yen and sterling yen, these two I would actually avoid with the FOMC tonight. If you're not super familiar with the yen crosses, you might want to avoid the euro yen and the sterling yen, because in terms of how the sentiment is going to drive the Japanese yen, is it going to drive Japanese yen stronger, or is it going to push the dollar stronger? This push and pull from the dollar and the Japanese yen, the impact onto the euro yen, the sterling yen, is actually not going to be immediate. I think there's going to be a little bit of a lag. We don't know what that lag is going to be. Look, we don't even know what the immediate impact onto the market is if the FOMC hikes by 25 basis points. So you're putting yourself on a lot of risk if you're trying to force yourself into opening a position on the euro yen or the sterling yen or even the Aussie Japanese yen. All right. Is there a sell opportunity on the euro pound? Let's take a look at it on the hourly time frame. Probably not. Yeah, I think at this point in time, the euro pound overall is still above the Ishimoku cloud. I think we have actually seen a little bit of a correction on the euro pound, so we can actually consider this as that correction. We have corrected towards 50%, so not too keen on looking on a sell on the euro pound at this point in time, just because we have transitioned above the Ishimoku cloud as well on the euro pound. We might see a little bit of a resistance building up, maybe closer to about 88.50. So let me just highlight that. Right. So we might see a little bit of resistance, but if it fails at 88.50, do keep in mind, if you go short on the euro pound, you're going against the trend on the daily time frame. You're going against the trend on the hourly time frame again as well. So graph, I think this one here is a little bit risky as well if you try to look for a sell. If you're looking for a buy on the euro pound, I don't think it's that great either, because it's closer to 88.50. Now if it does break 88.50, then the next resistances are going to be about 88.75, right? That's just about 25 pips. So, you know, if you're going to be looking for a long position, then you're going to be capped pretty much, right? Your stop losses is going to be there. You're risking a lot more than you should on the euro pound. Now, if you're thinking, okay, I want to go short euro pound, if it fails above 88.50, you can do that. Just make sure your stop losses are slightly above 88.75. In terms of target level, you need to be looking at about 88 max. So does that give you a good risk reward ratio? Yeah, I guess so, but it will be against the trend. And let's just give you an illustration in terms of how far up the fib could actually go. The fib is actually lined up at 127.2 at 88.75. So there's still that possibility the market could drive it towards 88.75. If it fails at 88.75, then yes, I think that would give you a much better selling opportunity. But we need to make sure that the momentum is exhausted. In terms of correction, you don't actually go more than that 88 level as well. All right, so we need to see that transition happen. So if you're looking specifically for a sell on the euro pound, I would be looking for more of a rejection to happen at maybe around 88.75. If that happens, then yeah, I think in terms of your short on around 88.75, then your stop losses could just be about 20 pips. So hopefully this helps on the euro pound. Stop spam. All right. Okay, let's talk gold. Gold here, we were looking at a couple of scenarios. This was discussed on the Monday session. So gold has jump started a little bit. All right. So we have actually seen a very wild swing lower yesterday and gold, and this creates a little bit of instability in the market and creates a lot of risks for gold traders. Gold, unlike the major currency crosses, because of what happened yesterday, it causes a lot of problem. Because if we say gold needs to pull back to 1900, it did that yesterday within just a couple of hours. So it's a little bit risky. All right, this one here disrupts a lot of what we were planning to look at. Does it fall under a technical term where the 1900 level stands? Yes, it does. So right now you can clearly see that even 1920 still holds, because 1920 was actually the level I was looking for. If there's a daily close below 1920, then we move towards 1900, 1880. That would be the best scenario, but it kind of just whipsaw and went through 1920 all the way down to 1900, and then it bounces back up. So I would ignore that wick that you see. That wick is going to be there on the chart. This is actually going to disrupt a lot of things. It'll disrupt the Ichimokus, and it disrupts the. If we go on to the hourly time frame, it kind of disrupts the stochastics a little bit, just because of that drop, and then it creates a little bit of a whipsaw. Now, price, I do anticipate price to be stable leading up to the FOMC, not really exceeding 1935 and not going below 1920, at least until it's close to the FOMC. So keep in mind, that's my projection, because of that drop yesterday and that quick recovery. It creates that long wick on the daily chart. There's a lot of risks involved in gold at this point in time. I believe what causes that drop was the inflation costs, and that's pretty much it. But so the FOMC, it's going to be a huge driver in gold. I think the riskiest assets to trade tonight, it's actually going to be gold. Second would be the equity market. Third would actually be the currency market. So in terms of crazy volatility, gold would actually be at the very top of the list. Now, the reason for this is going to be the first time in 2023 that this is going to be the first rate hike. So it is actually going to, what the press conference is going to be tonight, and the statements that's going to be released tonight, it's actually going to set what's likely going to happen, what the FOMC is going to be doing for the next few couple of months in 2023, right? So this is going to be really, really risky because we, as a trader, some of us, not all right, some of us that looks at gold as a reference point, we actually want to look at the correlation between what the FOMC does and how it correlates with gold. Now, if the FOMC surprises the market, so the two surprises in the market would be a 50 basis points hike, which would make the FOMC hawkish, or more of a dovish stance at 12.5 basis points. Now, I think a lot of you guys probably didn't read up on the 12.5 because this one wasn't actually disclosed or discussed in the public a lot, but the consensus for the interest rate tonight, the number 12.5 basis points actually comes in as well. So if the FOMC hikes by 12.5 and we see a strong rally in gold, it might actually break 1950, right? You will see that move happen if FOMC hikes by 12.5. We will actually see a quick drop to the downside back towards 1900 if FOMC hikes by 50 basis points. The problem with this is that the 25 basis points is a huge question mark in terms of where the direction is going to be. So I'll just put it simply, just to illustrate what's likely going to happen. You could look at gold price movement tonight, and I would say I don't care if you're a scalper, scalping gold here and there for $1, half a dollar, I don't know, or you're more of a position traders, which I don't think you're a position traders in gold. If you're spamming there on the channel, right, you're probably looking for a quick profit, a quick break. No matter what you do, short term, long term, medium term, that's going to be a huge risk involved if you're trading gold tonight, and that's just a fact, not anything else. Okay, so just keep that in mind if you're trading gold. We just discussed the Aussie USD already. The Aussie USD is pretty much range bound. I think it is, in terms of strength, major currencies out of the Aussie USD, the Euro USD, the Pound USD. Aussie USD might actually be a little bit more stable than the Euro USD and the Pound USD. But yeah, Aussie USD, we do expect a resistance coming at 71 cents, 71.25. It's still going to be a potential resistance for the Aussie USD. So it could fail at 71 cents. It could fail at 71.25. A significant breakthrough above all this resistance would be beyond 71.25. That could lead it straight up to 72. But this would mean that the FOMC needs to come in with a 12.5 basis points hike. Yes. So the daily momentum on the Aussie USD, the Euro USD, the Pound USD, the fast stochastics has already dipped down below 80. So this is the concern that I have just by looking at the dollar index and comparing it to the Euro USD and the Pound USD. I'm just more cautious of a potential strengthening in the US dollar. I don't know what's going to be the trigger. Is it going to be today? Is it going to be next week? But we are eyeing a potential correction in the US dollar. If it does break above 102.50, then we could actually confirm that correction. We might actually see dollar strengthening a little bit, maybe leading up for the month of February. I don't know. But one of the key triggers would definitely be what the FOMC does today, what they say during the press conference. That's going to be really key. So Euro USD hasn't come down. The Euro USD hasn't moved anywhere. How about the Aussie Swiss? You're looking for an intraday trade on the Aussie Swiss. The Aussie Swiss has, in terms of daily, this one here has stabilized a little bit, but it's still at a huge risk because we have that 1 day, 2-3 days drop on the Aussie USD here. It's actually gaining momentum. Take a look at the stochastics. The fast stochastics again has dipped down. The overall trend remains to the upside though. So maybe if we want to focus on, there might be a little bit of support closer to the Tenkan Sen. That would put it closer to about 64.50-ish, right? 64.50, and then the Kijun would be at about 63.75 if we adjust it. All right, so Aussie Swiss on the daily, this one here is still okay. I'm just more concerned if this one here has become overbought, then we might actually be looking at a deeper correction. The current correction right now is at about 38.2. We might actually see more of a push towards 50%, potentially towards 61.8%, where this 64 cents is located. So yeah, in terms of room, I think there's still room for the Aussie Swiss to go down a little bit more, but really depends on how strong that Aussie USD is. If the Aussie USD fell off, obviously, the Swiss is actually going to be affected as well. So this is again very similar to the yen crosses. The impact, it's not going to be immediate. This is going to be secondary. So I would say, with all the questions that I get today, people looking at the Euro Pound, the Aussie Swiss, the Aussie Canadian, I would say the Euro Yen, Sterling Yen, maybe stay clear of the crosses. at least until the FOMC is done with their press conference. So that's what I would say. You want to trade today, you want to focus on the currency majors, right? You can trade the Aussie USD, Euro USD, Pound USD, Dollar Yen. Gold, if you're really familiar with gold, then yeah, I don't think anyone's going to stop you. You're probably going to be looking at opportunities over there. But if you have no clue on how the gold mechanics work, then you need to be a little bit more cautious and basically just follow this blueprint that I have on gold here. Right? You might even want to screenshot it if you want to, if you trade gold. So yeah. Why there's no momentum in Pound USD for intraday? Because everyone is awaiting the FOMC statement that's going to come out in 6 hours right now. So the market is going to be flat. You're going to be looking at that movement to happen maybe an hour before the FOMC. That's probably where we might see a little bit of a momentum picking up. But that momentum is not going to be the real momentum either. We might actually create more of a whipsaw. It's not going to stabilize itself until we have a clear view of what the FOMC is planning to do, at least for the next 3 months in the market. For pound and euro, we still need Bank of England and ECB confirmation tomorrow, yes, but you can still trade off based on what the FOMC does. In terms of the Bank of England and the ECB, it is going to be an impactful event. But I'm not expecting a lot of surprises from the Bank of England. I'm not expecting a lot of surprises from the ECB. I think Bank of England, Bailey. I think he's probably going to go with either 25 or 50 basis points. It's actually not going to impact the market much, in all honesty, because what the FOMC does is going to create that swing that the market needs, a little bit more of a confirmation. In terms of the weighing on how important the FOMC compared to the Bank of England and ECB, I would actually say 80% of the volatility this week is going to be FOMC, 10% from Bank of England, 10% from the ECB. I don't think the ECB is actually going to slow down in terms of their rate hike. I think they're still going to proceed with the 50 basis points, but I don't know how they're going to process the flash CPI that we had just now, which is a drop from 9.2 to 8.5. But what we have today is actually not the final CPI. It's still going to be the flash CPI. So with that assumption, I think the ECB is still going to focus on the previous final CPI that was released last week, if I'm not mistaken, or 2 weeks ago. That's going to be their main train of thoughts. They'll probably say, they're going to be hiking 50 basis points because the core CPI continues to grind higher, even though the headline CPI, headline inflation fell off because energy prices fell off, but food prices are still on the rise. So that, I think the ECB is still going to go with 50 basis points. So I'm not expecting a lot of surprise from the Bank of England and the ECB. But with the FOMC, I'm looking forward to that surprise. So in all seriousness, I really want to see a dovish FOMC or a very hawkish FOMC. I don't like if they say, hey, we could hike by 25 basis points, because then we need to process what Jay Powell, and really depends on what the journalist is asking Jay Powell during the press conference, which is really hard to process. It's going to be more of a tougher process for everyone. But if they surprises the market by 12.5 basis points, it's a clear go that the US dollar is going to get destroyed. If they hike by 50 basis points, then we know that the US dollar is going to skyrocket. The Euro USD, the Pound USD, the gold is going to get crushed, right? So I like that surprise a lot more than FOMC coming out neutral at, hey, we're going to do 25 basis points. So we have discussed the Euro USD and the Pound USD at the very beginning of the session. So if you just join in, we only have 5 minutes to go. Probably going to show you that the overall tone on the Pound USD and the Euro USD is going to be flat. It's actually still range bound, right? Not really expecting much until the FOMC passes over. But yeah, You can review the beginning of the session if you want to once I'm done with this session, but I just give you a laydown. We're still range bound. In terms of a range, it's going to be 1.0850, 1.09. That's noticeable on the daily. In terms of the intraday, the range for the Euro USD has actually widened up all the way down to 1.08. All right. So we got resistance 1.09, 1.0925. Anyway, just a recap for everyone, just in case. You guys need to jot this down. If you just jump in, screenshot this, I don't know, but this are going to be a key level. 1.09, 1.0925 as your key resistance, 1.0850 as your first immediate support, below 1.0850, and we have 1.08 on the Euro USD. There is no trend. It is choppy. It is sideways, at least on the hourly time frame. This is the hourly time frame. That was the 4-hourly time frame, right? So this is going to be your trend. The transition above the Ishimoku cloud at this point in time, it's going to be a little bit tough to accept that. I think this one here could get easily pushed down as well. The pound USD in terms of range, we got 1.2350 as your immediate resistance, 1.23 as your immediate support. Beyond 1.2350, we got 1.24, 1.2425, 1.2450. Below 1.23, we actually don't have a lot, maybe about 1.2250, but ultimately we are going to be looking at a move towards 1.2150. So if the FOMC hikes by 50 basis points, this could happen. It's a huge ask, but that's probably why I'm really looking forward on a surprising FOMC. Just surprise the market. I don't know. Don't be neutral. If you're new to trading, you could use tonight's session as an educational session on how volatile the market could be. But if you're new to trading, I would say stay clear of the market until it's stable. This is going to be one of the most high impact wick, probably one of the most volatile wick that we have seen in 2023. We have gone by past 1 month. Tonight's FOMC is going to be the first one. They are going to be there's going to be a rate hike in 2023. So it's actually going to be key. It is a big deal. All right. I'm looking forward to that surprise, but I don't know how possible that surprise is. But I like to play it. I like to play it safe. So in terms of probability, I don't think it's going to be 100%. They're going to go with 25 basis points. I think we are looking at 20% possibility that you're going to hike by 50. 20% that they might come in lower at 12.5. So the 25 basis points at this point in time, it stands at around 60% in terms of probability that they're actually going to be doing that. Sure, it's still bigger. Then it's still going to be bigger than the 12.5 or the 50 basis points in terms of probability. But yeah, I don't know. Even 1% bucks me a lot. Nice market today. Let's hope that that's actually going to be a fun market tonight. I'm really actually looking forward to the FOMC. I know a lot of traders are actually ramping up for that. A lot of traders are really looking forward to tonight's event. So we might see an extreme volatility. And when we talk about extreme volatility, do keep in mind your spread might widen us up as well. So if you have a position, even with your stop losses, you need to adjust your stop losses carefully, because it might be the spread that's going to take off hit your stop loss or you take profit. So I don't know. Just be mindful of that spread. All right. Okay, so I think we can wrap it up in time for tonight. I think we covered a lot, right? Just one more, if you don't mind. The US 30 bucks me a lot because it's actually finding resistance at 1.34. US 30, where is it going to go? We don't know. But 1.34 really bucks me as it stands right now. It's just really hard for price to break through above 1.34. So if there's that surprise hike again from the FOMC, and I don't know if 25 basis points is going to trigger any sell-off, but the 50 basis points is definitely going to trigger a sell-off, right? We might actually see a quick drop towards 33,500. So it's an easy 500 points to the downside. Easy. All right, some analysts are actually calling for a 1,000 points drop, but from the last surprise that really moves the market, it was possible because we did see the market swing at about 900 points within one day for the US 30. But if the Fed hikes by 50 basis points, we are definitely going to see a huge sell-off. Right, so if that happens, we are going to see that sell-off happen. All right, so just keep this in mind. If you want to look for sentiments, then look at the US 30 and the S&P 500. If you want to look at how strong the US dollar is going to impact the market with a surprise, or if not, no surprises, then look at the gold prices. That should give you an indication of things to be. All right. Thank you all. Have a great night. Good luck with your trades. Stay safe. Don't force yourself into a position you don't want to. If you're not sure what you're doing, then stay clear of the market until it's actually stable. And tonight's not going to be that night. All right? Good luck, guys.